you live.
Well, our next guest has over 18 years experience managing money. Todd Schoenberger, Managing Director of Land Colt Trading, joins us. Todd, I was reading your notes this morning, and you're not, let's see, how do I say this, positive about the economy?
That's right. That's a great way to put it, because when you start thinking about just the macroeconomic data that we've already received, the outlook for the immediate future is not looking good. And I got to tell you guys, I've been bullish for a long time now, but right now I'm very skeptical about this economy. However, for the markets, I think we're going to be fine. But next year, it's a look out below scenario. So I think we're going to be in for some rough times ahead.
Okay, so how do you protect your pocketbook?
Well, I got to tell you, you got to be defensive here, but you got to look at companies that are going to only help you, that you only know that are going to grow. So for one thing, if you start looking at companies that, one, you already know that companies are not going to hire, but you know that they're good on the multinational side. So a company like McDonald's, for example, 40% of its revenues come from Europe alone. But you can't just find companies and stocks that are just domiciled here in the U.S. They only sell their goods and services here in the U.S. You really need something that's much more global, much more worldwide. That will help your portfolio down the road.
All right, global and worldwide, I get it. But you like Hyatt and you like Hertz. This seems to me like a little bit more discretionary to me, traveling, vacationing, and that sort of thing.
Business travelers, Chris, because here's the thing. I'm not talking about the recreational traveler. You have to start thinking that companies are doing well in the bottom line when you start looking at these earnings reports, but they're doing it at the expense of human capital. So they're sending their labor forces out on the road to try to drum up new business, meet with clients, etc. Companies like a Hyatt that cater to business travelers with those Hyatt Place hotels, as well as Hertz on the rentals. Those are two companies that are dancing with their 52-week highs right now. Those are companies to consider. They should outperform in years to come, especially if unemployment continues to dance with double digits again.
Okay, looking at your broader asset allocation, are you reining in the risk a little bit? Have you pared back your stock allocation?
No, I have not, and I'll tell you why. Because I have to only assume that we will have a QE3 and maybe even a 4 down the road. You're 16 months from the Democratic convention. It's hard to imagine that you're not going to have some pressure put on the central bank. And they could say they're independent and all this stuff. But bottom line is you can't help but think that Capitol Hill, including the White House, are not going to give the FOMC a little bit of heat to start doing something, whether it's a QE 2.5 or whatever you want to call it. So I'm thinking that's going to happen. And that's why the markets are saying, look, bad news is good news is great news. That's going to be the way to go for the second half of this year, which is actually good for stocks, but it's really poor for the economy.
All right, I tell you what, Todd, you either love it or you hate it, and you love it. LinkedIn right now, priced at about $85. You still think that's a nice little price to get in?
I love it. I don't know why you wouldn't buy it at this price right now. Look, when the stock came out at $83 when its IPO.
All right,
in that
Todd,
first
I got to
trade.
interrupt you, Todd. You love LinkedIn. We appreciate it. Got to go to the president at the White House. Good chatting with you, President.